With us now, someone who cares a great deal about what banks like Morgan Stanley and others are doing with their cash. Jason Tyler, Senior Portfolio Manager at Ariel Investments. So, Jason, James Gorman from Morgan Stanley saying, no, we're not going to be buying back stock anytime soon. Maybe no big dividend hike either. Can you extrapolate that to the rest of the financials? And if so, what is it going to mean for stock prices?
Well, the good news that came out of Basel was that most of the big banks had already gotten to the capital levels that they set. And the reason the stocks responded positively, frankly, is because there wasn't any big surprises there. So I think it was fantastic news that all these countries were able to come together with good agreement, but nothing hugely positive from an economic perspective for banks in the short term.
Okay, one more question on Basel, and then we'll move on because, while we could spend a lot of time on Basel, it is that important. There are other things to talk about. Raj Cohen, the Dean of Financial Services Lawyers, called it astonishing that U.S. banks have to deduct mortgage servicing rights and deferred tax assets from Tier 1 capital. Is it really that big a deal?
It's a huge deal. It's funny, you and I haven't talked about it a lot, but a lot of even mid and small-sized banks, and you're right, Raj is hugely well-respected among particularly community and commercial banks. He's absolutely right. There's so many assets, there's so much capital that's tied up in deferred tax assets on the balance sheet of banks right now. It's unbelievable. Now, frankly, this is going to be a big tailwind as this starts to get averted and this capital starts to come back to be qualified as regulatory capital, but it's going to take years to do that, and the rules on how you can qualify for it to be seen as regulatory capital are completely archaic. So Raj is onto something that I think is incredibly important over the next few years in bank stocks.
Jason, speaking of bank stocks, does it make any sense right now that bank stocks as measured by the KBW Bank Index or even the S&P 500 financials are at the same level they were at the beginning of March? Back then, we had big economic growth happening. We had great trading numbers coming out of the banks. Since then, we've had the flash crash, a brutal second quarter, possibly an even more brutal third quarter, and the economic outlook is anything but good. How do you reconcile that?
Yeah, there are two or three things that affect that are the big impacts on bank stocks. One is whether or not they're going to have incremental dilution, and then the other things like interest rate sensitivity and loan growth, they get completely overwhelmed by this first factor, which is whether they're going to have to issue more common stock. And I think people realize now that the likelihood of big capital dilution is reduced significantly from last year and even March. And so even though the economy is worse, that's offset by the fact that we're not going to see incremental dilution in the near term.
Jason, I want to talk to you about one bank in particular, Bank of America. In our past conversations, you have been right to highlight this as one among the big banks to be concerned about. BofA has underperformed its peers dramatically. Today, we're supposed to hear a new strategic vision from Brian Moynihan, the CEO. What does he need to say to get you excited about BofA?
Well, what BofA has is the best retail franchise in the country and the best overall small business franchise, maybe along with Wells. And he's got to figure out how to communicate to the investment community that he's going to translate that into earnings growth and into furthering to build a real franchise. And that just hasn't happened yet. There's been a lot of movement of the management ranks around at the company, but nothing to really show the investment community or the economy as a whole that they're going to create a better franchise out of a fantastic footprint and great retail base that they have.
But is staying the course and doing quote-unquote more cross-selling going to be enough to inspire any investor?
Well, I'm obviously big fans of J.P. Morgan, and what they've done is just execute better than everybody else. It hasn't been having the best plan, the best strategy. It's just been executing better. And BofA has the same opportunity to go out and pick what it does best, better than anybody else, and turn that into better economic growth for its shareholders.
All right, Jason, we're going to check in with you after we start to get those third quarter numbers. They're looking pretty dismal right now. Jason Tyler of Ariel Investments.